Welcome to Innovation and Leadership. I'm Jess Larson. On this episode, we get to have Lorien Gabel, CEO, founder at Figment. If you don't know, they're big in their world. We're going to be learning all about Ethereum and crypto and the future. And they've had some great successes. I think the last round was at about 1.4 billion. Lorien, thanks for doing this.
No, it's a pleasure. I look forward to it.
So for people who, crypto and some of these things, blockchain stuff feels like a little bit of a black box. Can you start with what you guys do and who your ideal customer is?
Right. Awesome. Okay. Well, appreciate the opportunity. There is often a lot of unnecessary complication and noise in our space, which we've worked at for years to sort of simplify and clarify. So hopefully I can do a little bit of education on that front. So we do something called institutional staking on proof of stake blockchains, which include things like Ethereum and Solana, which you may have heard of. Now that's a lot of word salad there. But if you can, to simplify and take it high, there's really two mainstream blockchains at this point: Bitcoin, which I'm sure everyone has heard of, and that's basically runs on an operating system. It's not technically an operating system, called proof of work. And most people probably heard about these large data centers that consume a lot of energy and computing power, and they're basically competing to produce the next block, and then they get Bitcoin in return. They're called miners, and they generally seek out sources of like very low cost power or environmental power in some cases. And proof of work has worked fantastically for Bitcoin. I think it's pretty well proven its use case around some type of store of value, a digital gold, if you will. It's never been hacked. It works pretty well. But about 7 or 8 years ago, maybe a little bit longer now, people were saying like, hey, can you run a decentralized blockchain in a different way, in a different systems that's secure and creates the incentives you want to create in a decentralized community? And so what people came up with something called proof of stake. And really what that is really the same way. It's basically a way of securing and running a blockchain in a decentralized manner, but with less computing power and perhaps more scalable. And just, anything I say now, sometimes the communities can be kind of tribal in blockchains, and nothing about what I'm going to say is a negative statement about Bitcoin. I love Bitcoin. I buy a little bit of Bitcoin every week and have for 6 or 7 years. So this is a statement about Bitcoin. It just happens not to be our business. So, if you want to know like the big end, Ethereum runs on proof of stake, just made that transition like about 1.5 years ago, which is kind of a cool technical feat, which we can get into if we want to. And most of the newer blockchains, like Solana or Polygon, that have had some amount of adoption are running on proof of stake rather than proof of work. For various reasons. So we've basically built our business around running these proof of stake protocols on behalf of our institutional clients. So what does that mean? Like if there's one, without getting into the technical differences, if there's kind of one thing to keep in mind about the difference between proof of work and proof of stake and who our customers are, is if you own Bitcoin, you don't actually participate in running the protocol at all. Like you have your Bitcoin, you can do whatever you want with it. You don't really have a say necessarily or a role in actually running and securing the blockchain. Those are the miners. And so there's like two very separate audiences. There's actually a third audience, which is the developers, the core developer community. But leave them out for a second. So what proof of stake does is basically bring the holder of a token, an Ethereum token, for example, together with the people who run the protocols, the miners in the Bitcoin language. So if you have 32 ETH, you can basically run an Ethereum node. If you have a lot of 32 ETH, like our customers, fiduciaries who can have hundreds or hundreds of millions or billions of dollars worth of ETH, you probably want to outsource that function because it's 32 ETH per node. And you get to divide 100 million worth of ETH divided by 32. That's a lot of Ethereum, a lot of nodes, and a lot of infrastructure and complication. So essentially, for any large Ethereum holder, we run the staking infrastructure on their behalf, which allows them to basically run the protocol. So if you have 32 ETH, like you and I, if we had 32 ETH, which is, I don't know what that value is right now, $70,000 or $80,000 worth of ETH, we could run up our own node, and then we could start producing blocks and providing security to the Ethereum network. And it's like as if you as a MasterCard or Visa holder could actually process Master and Visa card transactions and then share in some of that revenue. So that's like not an awesome analogy, but it's not horrible either. And so basically it allows you to participate in return for, running an Ethereum node. You will get some small amount of Ethereum back. You can think of it as, we call it a reward rate. You can kind of think of it as like, the safest thing you can do with your crypto. There's no counterparty risk. You don't actually give us your Ethereum. You just assign us the right to run this Ethereum on your behalf. You hold it with your custodian or however you hold it now. And then basically you can think of it as kind of like the safest thing you can do with your crypto and still have a return rate. So the staking rate in Ethereum right now is about 4.5%. And that's made up of getting rewarded for block production, and then also like every time there's a transaction, someone sends some USDC or a stable coin, then there's a fee associated with it, and that's paid out to the people who are running the nodes. So I'll take a breath. That was a lot, but that's essentially the difference, and it's what we do. So our clients are VC firms who hold proof of stake tokens like Ethereum or Solana, custodians, exchanges, fund companies, ETP. Soon to be ETFs in the US, et cetera. Those are our clients. We don't serve consumers directly.
Yeah. So I would love to go like much more basic to start for people listening who are crypto newbies like me.
Like what the hell is cryptocurrency?
Well, maybe more from like a investment and usefulness perspective. So like to me, and this is just my ignorance. So correct me here. Like, when I look at Bitcoin, to me, it doesn't feel like an investment. It feels like trading a commodity or holding gold. Right. You know, like it feels like a speculative thing where you're hoping the next guy feels stronger about it than the last guy. Right. And then what I hear about Ethereum is like that there is a usefulness factor of like a smart contract, which could potentially, I don't know, real estate could be attached or something like this. So with that, like ultra basic, like, help me understand what I don't understand there.
Right. So maybe like take it up a level, and maybe we can start from like why myself and our co-founders and many people are in the space, and we can sort of think about it from like an almost philosophical perspective. You're right about Bitcoin in that it very much looks like some form of commodity. What blockchains basically enable is digital scarcity. Right, which is, for those of you old enough to remember like LimeWire or any of the music trading, once music was digital, you could just like copy it, and you can still just copy it, and you had one song and you just copy it. And so there was a prime, this is again really like overly simplistic, but basically what the cryptography behind blockchains does is allow you to have a digital asset that is unique and can't be copied. So it's very simple. It's like you can't make gold. Like they've been trying for a long time, but you can't make gold out of another substance, right? Yet. And so in the same way that you can't make Bitcoin except as per how you mine it, and there's a limited number. And so it basically creates a scarce form of an asset. And so that allows a lot of things, like you can have digital art that can't be copied, and you can have provenance around that. And you can have single sources of truth in a database that everyone agrees on. There's not many things that people agree on these days. That people universally agree on as a single source of truth. So essentially what it does is it allows a form of digital scarcity. So just think of it that way. You can prove who owns it. You can prove it hasn't been copied. You can prove there's only one, or in the case of Bitcoin, 21 million of these things that will ever be produced. Does that make sense? So now you have a digital version of gold. Yeah.
Well, and I should clarify, when I say investment, I'm using like Warren Buffett's mentor, Ben Graham's version of like, hey, safety of principal plus adequate income, right?
Okay. Right.
And so like investment is a very loosely used word. Used word. I'm saying from a, safety principle plus producing income so that you can value it. It has an intrinsic value as a relationship to its output, like income producing real estate, right?
That is like a pretty narrow definition of investment. I mean, there's a whole host of goods that people quote invest in.
Exactly.
Right? Which don't have those qualities at all, right?
That's what I wanted to clarify. Like, people consider
a label on your Prada label on an otherwise normal shirt.
Yeah,
like there's a whole bunch of things that have don't have an income flow associated with them that are extremely valuable.
Exactly, and it's not to say that something, and the way Warren Buffett defines it is not to say that things that are speculative are not valuable. It's just the separation of category, and I wanted to clarify that because people consider like investing in Forex when it's, according to Warren Buffett, it would be more like trading in Forex, or speculating in Forex would be term. And so it's imprecise language. So that's why I wanted to clarify there. So,
sorry, go ahead.
And so I guess my real question was about the utility of Ethereum, because I keep hearing that it has utility and smart contract value and stuff, but I just don't know anything about it.
Yeah, maybe we can sit on the Bitcoin thing for just a second, just
Oh,
because
sure,
it's kind
yeah,
of
sure.
fun. So um, let's see. I think the Forex is actually a great comparison in some way. I've often described our business, because we run on a bunch of blockchains, as basically like running for getting paid in a bunch of like foreign currencies that are very volatile. So I've actually kind of used that analogy, and like we're not Figment, we're not anarchists. Obviously, we have institutional investors and 300 institutional customers, etc. So we're not anarchists, but one of the reasons that I got into space is that I'm highly skeptical of very concentrated top-down systems. So for 99.9% of human existence, there wasn't central bank currencies. I don't know, maybe central bank currencies is the best way to run things. It could be, but it might not be. And certainly I think that systems are less fragile when there's alternatives. I'd rather have a bunch of tiny little small failures than 2008, etc., or massive devaluations of currency, which has happened like pretty much with every major currency in the world. It might be happening now, depending on how you think about the U.S. currency and inflation and monetizing debt and all those fun things. But like, again, I'm much more confident in bottom-up systems to create something that is valuable and useful for people. And I think that people have like a fundamental right to trade and exchange value however they want. And I don't think that Elizabeth Warren and the people at the Treasury are any smarter actually in this area than the common person worried about like their financial situation. They're probably worse, in fact, because they really haven't, participated in real life. Many of them, they've been academics their whole life. So basically, my point is like, hey, here's an alternative system. No one's forced to buy Bitcoin. You don't have to buy Bitcoin. You can ignore Bitcoin. You can say that like no one's forcing anyone to do anything, right? But maybe there's an alternative value transfer or holder value that might make more sense when governments print a lot of money. I don't know. Maybe it won't. Maybe it's a fad and it'll fade out and no one will care about Bitcoin in 10 years. I don't know. But it almost doesn't matter, right? Like alternatives, I think, are good in a free society. And so here's an alternative store of value. Maybe gold's better. I don't know. Maybe the gold bugs are right. Maybe gold's the ultimate. It's been around for thousands of years. Bitcoins have been around for 12. And maybe gold at the end of the day will be like the ultimate like inflation hedge. I don't know. But general principle, I think like having alternatives and experimentation is good for humans and good for society. So that's my little like philosophical bent on why it's important.
And question about that, and this again, just my ignorance, but like he talked about like major devaluation of currencies and stuff and crazy fluctuations. Do you feel like what's Bitcoin trading at today?
Or I don't know, 63 or something like that. It's traded between $63,000 and $70,000. Yeah, 63,000, okay.
Yeah. Okay. Do you feel like as it gets more mature, it won't have the crazy fluctuations where it doubles and halves and all these kind of things, or not necessarily? Do you think that'll continue over time?
I don't know. I think the volatility's gone down I'm far from a financial macro or trader and understanding of volatility and stuff like that. Probably as it's more widely held. The thing about Bitcoin too is it has I guess the relative float is pretty small. So like small floats probably in some way that I don't understand create higher volatility. And there's just a massive number of people who will never sell their Bitcoin. Like they will ride it to zero if it's going to zero. Right. You can think of it as a religion. I don't mean religion in a bad way, actually. Like religion can be fantastic. Cults might be bad, but religion there's a whole host of good positive things. So Bitcoin is very much a religion. Much in kind of the same way that like the US dollar is a religion, right? Like we all believe that it's worth something. It's just a fucking piece of paper. Excuse my French. And like, so in that way, there's a whole community of people who hold Bitcoin who will never sell ever. Like maybe like when they die, it'll go to their kids will be like, finally, dad dead. I'm going to buy my Porsche. No. So anyway, so I think that reduces like the amount that's out there, and that probably contributes to volatility in some way. But as it's more widely held with maybe the ETFs and stuff like that have a counterbalancing force in there. So there'll be deeper markets and, there'll be more market makers and stuff like that. So I don't know. I think it's trended lower volatility, but it is still a highly volatile asset.
Yeah. Okay. Thanks. Okay. Let's switch over to Ethereum.
All right. Ethereum, which is where we play. So let's do that. Um, right. So the other reasons you might have gotten into blockchain, and my two co-founders would probably qualify in this area rather than my little rant against the big banks and our top-down financial system, and bailouts and all that stuff, would have been for reasons of like privacy. Like if you send a picture of your kids, why do you get diaper ads for the next X number of years? Google, there's a few large tech monopolies who basically monopolize your data or have a monopoly control your data, monetize it with huge profits. And one could argue with a bunch of negative externalities if you look around the social networks and stuff. So one thing blockchains also are permissionless. They're a way for you potentially to own your own data. That use case hasn't been like fully realized yet. But they're basically, it's a, if you look at like what's happened at developer communities by like Facebook and Apple, the Apple Store, there's just like a lot of control in the digital realm by a very few number of companies. And they make large monopoly like profits based on your data and your usage. You really don't have an idea what they're doing with it. So again, kind of going back to my analogy on as an asset, maybe blockchains are counterbalanced to this like centralizing force that's happened in the last, at least since 2010. Like our first company was an early ISP in the early 90s, to date myself a little bit. Was back before a web browser, actually. And it's like the original vision of the internet, now as an idealistic 20-year-old back then, was like, here's a communication method where it's not going to cost like $2 a minute to call the UK, or the only way we can send things is with like a fax machine, or like basically how we communicate newspapers is controlled like a few centralized intermediaries that again control the bandwidth and cost a lot of money. So like here's this awesome tool to basically enable peer-to-peer communication, right? Pretty cool. And I think that kind of happened for the first 10, 15 years of the internet. And then something happened where again, we see these large data monopolies essentially turning this into like not peer-to-peer anymore, but peer to Google to peer, or peer to a social network to peer, with a whole bunch of negative externalities. Like you don't know what the algorithm is feeding your kid on YouTube, probably not good. And we've obviously, seen a whole bunch of the negative effects of social media, and basically to the profit of a few companies. That kind of sucks. So again, not all this has happened yet. But maybe blockchains are an alternative method, an alternative computing network that is open, that anyone can join, that you can try a bunch of crazy things, that has some aspects of privacy. You can own your own data, in theory at least. And maybe this is an alternative to these large monopolies who, again, to rant a little bit, will get up in front of Congress and call for regulation because it's regulatory capture. Every large company does this. Once you are big enough, you make donations to Elizabeth Warren or the Committee on Child Safety or whatever the heck is Congress is doing, and then you ask for regulation, and then no one else can compete. Like this just happens.
And back to Ethereum and what it actually is in a smart contract and these kind of things.
Yep.
Can we go a little more basic there?
Yeah, so basically there are these things called smart contracts that can basically execute. They're totally open. Anyone could look at them. The network is totally open. So in Ethereum, a smart contract example could be like, I have some USDC, which is a stable coin, and I want to send it to another Ethereum address. And the smart contract basically enables you to do that transaction. Everyone in the world can see it, know what happened, and validate on it. Or you could have a set of smart contracts which allow people to trade an asset with no intermediary. So you can create a liquidity pool in one smart contract. You can create a market maker function in another smart contract, and then people can trade assets without there being a centralized intermediary. So basically, you can think of it like as a mini program that runs on this large decentralized computer network that is maintained by like infrastructures like ourselves and the other Ethereum holders. And you can just try out an experiment, and you could create an email network or some other communication network. If you create the smart contracts and people decide to use it, you can create a bunch of incentives. So basically a smart contract, you can think of it as like a mini program that runs on your computer, except this computer is like runs globally. No one really controls it. No one can say that you can't be on it, etc.
So I see a use case of like, the provenance for art, like who actually owns this piece of art, or like, maybe we don't need title insurance for real estate because I can prove and everybody else knows who does or
Yep.
doesn't own this real estate. Like that makes sense. Are there other use cases that are really strong that maybe
Yeah,
not
so
everybody's
let's
familiar with?
yeah, I'm like we've often been described as like some of the most skeptical founders in the space. You know, I've had VCs and we've raised a few rounds to be like, man, you guys are pretty negative at times about this space of which you're kind of dedicating your lives to. So um, I think the reality right now for Ethereum is that it's essentially a payment rail for stablecoins. It's like the Visa or MasterCard network, but for stablecoins like USDC,
Okay.
and a number of other ones. And that's pretty cool. Like you can send value very inexpensively around the world. And in some places that matters a lot. Matters maybe a little bit less than in the US where we have in theory a stable banking system, but you know, somewhere where there's higher inflation, you know, that's pretty valuable or where there's more controls. But most of the transactions, like the meaningful transactions, is really this decentralized protocol for sending like stable coins around, sending US dollars around represented as USDC. So that's like most use case. The other ones are there are um, decentralized trading platforms, DeFi, which is pretty cool. Most of DeFi right now is really trading other tokens, right? So, okay, it's kind of cool. And you've seen some real world assets moving on to Ethereum, real estate being one of the areas where there's a lot of talk about providing, you know, greater liquidity or market pricing, without being a public vehicle. So there has been a move in the last 12 months about bringing real world assets onto the blockchain. We'll see. I think probably that will grow. It is a real use case. I think there's some assets you probably don't want like daily liquidity in for various reasons. Real estate actually might be one of them. Like you don't want everything priced every second. Like there are reasons for like illiquidity is actually good in some financial assets or something. So we'll see. You know, I don't think everything should be on a blockchain, but maybe collectibles should, maybe art should, NFTs, stuff like that. Like that makes a lot of sense. Maybe some real estate should. It generally isn't liquid. So I think you'll start to see more kind of like a slow trend around real world assets. Clearly, we talked about like art and digital art and having some form of that, of which is unique and not physical, is like really that's proven use case. NFTs are still around. You know, they're not bubbly and pricey, but there's still a lot of them. And there's a lot of art that has value that's online only. So I think that use case has been proven. So, you know, what I'd like to see, so there is real activity happening. People are paying fees to use the protocol. People are paying real value to use the protocol for some of those things that I just talked about. I would love to see some communication protocols that are not run by Google, you know, like Gmail, etc. I'd love to see the equivalent of social networks, etc., that aren't tracking me everywhere and feeding me crappy content and algorithms to get me mad at my
Yeah.
neighbor. That would be nice. So I think that's basically where we're at without like overhyping or like being realistic
Sure.
about where we're at.
Um, that's helpful. Let's go back to your customer, these big institutional customers.
Right.
What do they need you for? What do you do for them?
Right. Okay. Great question. So, really our original customer set 4 or 5 years ago was essentially the VC firms, large individuals who invested in Ethereum or these proof of stake protocols before they really existed. And so they were the original token holders. So, you know, they maintain those VCs are still a core part of our audience. Is subsequently migrated now to crypto exchanges, crypto custodians, fund companies, an asset manager who holds a large amount of Ethereum, for example. They're all potential customers. And why are they customers? So again, these are permissionless networks. Anyone, you and I, probably given a month, well, probably you, maybe me, ironically, could figure out how to run an Ethereum node, given enough time, and we'd stake our 32 ETH and off we'd be running. So almost any protocol is built so an individual with a little bit of technical knowledge can participate and stake themselves. However, as a fiduciary, it becomes very difficult to run at scale. You may need hundreds of thousands of these nodes. Each node has to be kept running, has to be upgraded, has to be monitored. You need reporting, which is, even though it's an open ledger, is actually pretty difficult. So you need to know how much Ethereum they've actually earned and when and what type. So it's a bit of to simplify, it's a very straightforward technical outsourcing function in that most financial companies aren't going to have the resources to do it themselves. So if you're an exchange, your business is like being intermediary and facilitating trading, not running this very complicated infrastructure at scale. And same with custodians, etc. And then we specialize in it. There's a lot of like optimization, so you can earn a little bit more by doing a bunch of things at scale that you really can't do on your own. We have insurance, and so you're outsourcing. There are some edge case. Again, we're not a counterparty, but there are some edge case risks, and so we have insurance, etc. And kind of know what's going on that front. So there's like it's basically again, not quite, but an IT outsourcing argument.
Yeah. Okay. So,
Yeah.
talk to us about success secrets for building $1.5 billion company in a new emerging area where there's uncertainties and there's change. And, one of the principles that you feel like has served you and your founders to get to a scale. I mean, there's a lot of people very excited about this world, and hardly any of them have built $1.5 billion company. What's one of the principles that you think's helped you do that?
So this is the founders. This is our fourth internet infrastructure company, as I mentioned, going back more than 3 decades. So I've been very fortunate to have much smarter technical co-founders, both my chief product officer and my CTO. We also have a couple early stage VC funds, Figment Capital, and one of the most important things if you're thinking of starting your own company is to have a co-founder you trust and get along with. Now, that's kind of a difficult question to ask or answer at the start, but I think it's unless you're Steve Jobs or Elon Musk, which none or very few of us are, present company included, then I think it's very important to have a co-founder that has a very different skill set than yourself, and that is trustworthy. So kind of my first advice is generally like get that piece right. And I do, again, through our funds or, personally, I do some angel investing, and it's very rare that I think you should invest in like a single founder who has like one skill set. Unless you think you can identify the next Steve Jobs or Elon Musk, which I don't think I'm probably capable of doing. So, so that's kind of one thing is I've been fortunate and lucky to have a couple co-founders who are fantastic, and we trust each other and we complement each other very well and don't overlap too much in skill set. So that's kind of the first thing. I don't know, general startup advice. I think there's like stages in a startup. And in the first stage, you got to be very flexible. Before you have product market fit, before you have like a business that is repeatable and the people want, and you build a product that is differentiated. So you need to play around the hoop a little bit. I call it like just saying yes to everything early on. Like you don't really know what you don't know, and you got to try a bunch of things out, and being like this is the way it's going to work. This is how it's going to be. I think is detrimental early on in most cases. Now, everything I say has like a caveat for the aforementioned entrepreneurs I just mentioned. But assuming you're not one of them, I think you need to like be very open-minded to that you're probably wrong initially about the product and the customer and what they want in most cases. Again, unless you're Jeff Bezos or someone. And so you got to play around the hoop and say yes a lot, and a lot of experimentation. And at some point, hopefully you'll figure out exactly what you're building and what customers want, and how to do it at scale. And then conversely, even though you're bigger and have more people, you then have to say no a lot more, and focus on like building that thing and scaling it out. And I think that transition part is like, it's very hard to go from saying yes to everything to saying no, because you kind of want to say yes, but you can't do it. And you can't be like excellent at the one thing that you need to be for the first 10 years of a company, which is basically be really good at one thing. So I kind of like just getting that right is tricky, but you should, if you're aware that it's going to happen, I think is like super helpful. And like just founders, like look for that transition point, be open, and then be inflexible at some point.
That's a really interesting concept. I want to dig more into it. But I want to go back to one thing you brought up already around product market fit. It's such an imprecise term. It's actually one of my favorite things on the show to have founders who've grown 0 over $1 billion and hear what their definition of product market fit is. Can you tell us yours?
Yeah, mine's probably, I know there are some very good technical definitions, which I can't remember now. I think like basic product market fit is you have one thing that is relatively easy to sell to your audience, and you can repeat selling it without doing something new. I think like true product market fit, it sells itself, and you're trying to keep up with demand, like it's not just a sales exercise, but it's actually like it's a supply exercise. Like you have so much product market fit, that like it's not selling is irrelevant. You're just trying to keep up with demand. I think that's the version 2 of it. But version 1 is you just have something that you don't have to keep on like versions 1.1 and 1.2, but basically the core thing is the same, and you can keep selling that same thing at some level that results in profit, rather than every sale is like a like every sale is a customized thing that you do once. That's kind of my definition. Not
Yeah.
There's probably a lot better ones, but that's kind of how I see it. And you kind of know it when you kind of, again, like porn, you kind of know it when you see it. Can't really get a
Yeah.
definition of it, but you just know that like, okay, there's something repeatable and scalable here, and that people keep coming back for, and I don't have to
Yeah.
build it again. Yeah.
Yeah. By the way, as a snowboarder and outdoors person, I love your view out the window, and I love that you're in Jackson Hole. I'm
Yeah,
slightly jealous.
it's great.
Look at
Yeah, it's good. It's
that.
been spring skiing the last week, but more snow on the way. So it's good.
Yeah, and
Very fortunate.
we didn't bring up fellow Canadian. Grew up in British Columbia, out near Nelson, BC, and
Secret handshake. So
yeah, right. So let's talk about this idea of true market fit. If there's founders listening today and they feel like, they achieve basic market fit and they're making good money and they've maybe even progressed beyond it, but they have not been able to shave off the friction, and they have not been able to position themselves in the marketplace, and they have not really gotten this offering to the point where supply is the problem instead of sales and marketing is the problem. What's a lever that they should pull? What's a question they should be asking to help themselves, make it so magnetic that sales is not the problem, supply is?
So I think it's useful every quarter or on a regular basis to be like, knowing what I know now, would I start this company, or would I start this company in a different way? And so, or conversely, in my vertical or my industry, is there another company I'd rather be if I could have started that company? And so I try to do that on a pretty regular basis. And, fortunately, knock on wood, I've kind of been like, there's maybe 1 or 2 other companies in my space that it might be better to be them. But like, if I was in the top 5, I'm like, yeah, I think we did the right thing. Like I would have started this company again. Maybe here's a couple of things I would have done differently. But yeah, this wasn't a mistake, or there wasn't like a big different course of action. I think it's just a useful frame to be like, would you start this company again, or what would you do different? And of all the people in your industry, are you still happy that you're you, not someone else? I think the answers to that question will determine like whether you should keep going or do something really different.
Well, that's an interesting thought experiment. Maybe another
Yeah.
version of the question for me is, when you think about when your product was getting really good, but it wasn't to the point of having 300 institutional investors trying to be your clients, what's an example of something you tweaked, of something like, once a product's really good, what's something that was like the continuous improvement that crossed over into great?
Yeah. To be honest, I don't think that maybe it's just because I'm sort of in the weeds and it's like 99 problems every day, even though things look fine on the outside. You're just like, we're 5 years old. And so I don't think we've gotten to that point yet. Like there's
Okay.
a product like list of things that I want to build that's like a mile long right now. So
Let's do opposite.
Yeah.
Let's go from
Yeah.
decent product market fit to like some of the things that tip the scale into like really good market fit, even if it isn't full, true product market fit.
Yeah. So let me maybe answer this indirectly, and then I'll try to answer it directly. Another good question is to take a step back and figure out what business you're actually in. And so, like, going back to, again, the first example of being an internet service provider in the early 90s and mid 90s. And we thought, the business we're in, like, we're providing people internet access so they can have email and surf the web and whatever. So that's the business we're in. And then, like, a couple of years in, kind of realized that wasn't the business. We were actually in the customer service business, because, like, no one could figure out how to install, like, Windows X onto their computer and get a modem working. And, like, no company had an IT department that knew what email was. So we pretty clearly I was like, yeah, the pipes matter. Like it has to work and be fast-ish that anything was there. But really, it was our help desk. It was like the way we got people online because no one could figure it out and it was complicated. And we realized pretty quickly that actually our core business differentiator was customer service. So we built a whole bunch of like CRMs that didn't really exist and had a call center that, that was really great staff with a bunch of nerds who were like, super friendly with your grandmother or, the IT person who didn't know what the internet was. And so like, I think it also is helpful to answer, really identify what business you're in. And in our case, like I think to some extent we're still debating, like, are we an infrastructure company or are we a financial services company? And it's something that we've gone back and forth on to be honest. Like we provide something that looks like yield, back to our customers who, don't give us their tokens because we don't have custody of them, but who like have us run this infrastructure on their behalf. But most of what we do every day is around like running these nodes. We don't like have a financial product that looks like we have like these nodes and these data that's associated with them and keeping them up. So it looks like a classic IT outsourcing business. So we still, and I don't know that I completely answer that company, but some customers really care about rewards and some customers rates by like point they want to optimize that. And other customers just focus on like, we're participating in the protocol. We want to see what's going on. We want good reporting, etc. So it is like, yeah. It's
No,
it's an interesting question, and I don't know yet. I haven't quite figured it out.
well, I really appreciate the question. I think it's so important. But I think my favorite part was how you defined it. Is where's our differentiation? Like
Right,
I look at our media company for other CEOs on a podcast like mine. They go to Greystoke Networks. They see all this stuff we do, right? But guess what? It's not that expensive to produce a podcast episode anymore. Like there's a whole bunch of people that
right,
can get that done, right?
right,
And like
right,
what we really like, our differentiator is, as far as we know, we're the only ones in the country willing to guarantee, CEOs of hundreds of $1 million companies or $1 billion companies like 52 weeks a year or it's free. Like, no,
right,
we think
right.
as far as we know, we're the only ones willing to do that. And like
Yep,
our access to all of these very high profile people, and we're willing, like we guarantee you them as a guest or it's free. Like it's not the editing. I mean, we do the outreach, we do the scheduling, we do the producing, we, graphic design, copywriting, post to social media, cut the clips. It's
right,
just that our competitors can do all those things. And
right.
it's not really our business. Like it's like, in a way, it's a podcast production company, but it's really like
But it's
80%
yeah,
PR and about 20% lead gen, you know?
yeah.
'Cause-
So yeah, our analogy would be information, insights, and information in an area that's complicated, fast moving, difficult to decipher. Like we have a research group, and we can answer questions. Like, which is kind of stupid. Like, you're an analyst company? No, we sell infrastructure on Ethereum. But a lot of what we do is that we know what's going on in these communities. We produce a lot of content. We can answer almost any question a customer may have about some governance proposal or something. And so our equivalent to that would be around insights and research and knowledge. Is that we just know this better. People have regulatory questions. We know the regulations in this area, at least in North America and Europe, better than anyone. So we can be helpful around answering those questions for our customers, which isn't like we don't sell that. You just can ask us a question or read this analysis or see this financial model we built. You can use it.
yeah,
So that
it's
would be my equivalent.
it's funny because I'm thinking about this here because like the main thing that takes up most of my time these days is our new biotech VC fund.
Yep.
And like I'm sitting here as we're talking, thinking about, okay, what does differentiate us? Well, my partner created two of the top 10, they created two of the top, well, created's a loose term, but financed, invested,
Yep.
see two of the top 10 biggest biotech successes of the last decade. That's a genuine
Right.
differentiator, right? But like to the business you're in, like I started thinking like, yeah, we are creating medicines that can help people, prevent getting cancer, prevent getting diabetes, prevent getting, Alzheimer's, osteoporosis, so you can live longer, healthier. But there's also like this idea of like, in another way, we're like, it's almost like the investor is more of our customer.
Yeah, I
Like
was just going to say,
they're
is the
paying
LP,
us.
yeah, to be
They're
the
paying us to get
experts.
into this like really exciting world that, you know, could do, 100x. I mean,
Complicated,
look at
a lot of
Ozempic,
noise.
right?
Yep.
That company market cap went up by 300 billion within 6 months,
Yeah, it's
right?
more than,
And they're
yep.
like, it's like people who want a shot, put 1% of their money into something and do a little bit of gambling, basically, right?
Yep. Yep.
So, speculation versus Warren Buffett investments, right? They want somebody
Yep.
to like reduce the risk on their speculation and who has access to the top deals. But then it's like, okay, what's different between the other biotech VC funds that have a focus on longevity? Like what are we really like? And this is why I loved your point so much of like differentiation. What is the
Right.
differentiation? Because in
Yep.
many ways, that's probably the business that I'm really in.
And it's
I
probably
need
the
to like
most,
think hard so I can come up with it.
and probably the most difficult question to answer because they'll inevitably, if there's a TAM, if there's a large market, addressable market, and an opportunity, probably unless you can figure out a way to carve out a monopoly, you're not going to be the only one doing it. And so there's going to be other smart people who are thinking along that. And so it's often the most like difficult question to answer.
Yeah. I mean, that is one thing about hard tech and about biotech is like,
Yeah.
where you can, in most cases get a patent for 20 years and like you
Yep.
get 20 years of monopoly, right?
That's
It's
great.
just,
Yep.
can you make something that works is the hard part.
That's right.
Not can you like, hey, take this pill and you're not going to, take this pill and you probably won't get heart disease for 30 years longer than you thought, right? Like look at statins. Statins,
Yeah.
preventative medicine, does 15 billion a year in sales, right? Like, but like, could you come up with the original statin that actually worked is the hard part. Anyways, I'm gonna have to like go back and think about
it's
like,
funny. I've actually gone down we digressed, but I've gone down the statin like rabbit hole in the last few months.
Okay.
And there's just like, I think I'm coming out that they're generally like good. I mean, leaving aside, I think the issue is like if you're otherwise healthy and you have slightly elevated LDL, should you be on a statin?
Oh,
And so that's kind of, we're not talking about it's like obvious, but and so there is a fairly healthy debate going on, which I didn't know about that. And some people make the argument that actually high LDL in an otherwise healthy person will make you live longer. There are some stuff like that, and then there are the gene, the gene where there's people who have naturally high cholesterol, and those people argue that no, any amount of LDL, no matter how otherwise healthy you are, you should reduce it, and those are a good way to do it. So, anyways, I'm kind of like in the middle of that. Like,
yeah.
it's a pretty interesting debate going on. So,
Well, and one thing that is a little bit nice about this world is like you have to prove it to the FDA. It's not like lotions
Right.
and potions on the shelf at Walmart where
Yep.
you just get to claim stuff, right?
Yep.
And obviously that's not a perfect process. And there's just this question that's like, you're really pushing me on of the like, what are we differentiated about? Like a week ago, I had a CEO on the show, managing director. So PhD from Stanford, went in-house family offices, deploying money into longevity investments. I want to say at the last one, he deployed like 100 million. And he's already raised 50 million for his new fund. He's obviously smart, connected,
Yep.
guy. And so, what's the difference? Because like your alpha, your difference from everyone else is where the higher profit margin is.
Well,
what's a
you're I
competitive
don't know,
advantage?
maybe assuming you guys are smart and can identify the investments at least as good as other people can. You got all the vehicle stuff set up. Maybe your differentiator is this podcast and your network. Like if I was to start a biotech fund right now, I don't know any of the LPs,
Yeah.
right? And you have this huge network that even if you started a fund before, you probably know more people that might be interested as LPs than anyone on this planet, having done X hundreds of episodes.
Well, I don't know about more than others, but there is certainly the like, I have access to hundreds and hundreds of people from the years of the show and who come to our private events. And
Yep.
then, there's a deal flow aspect there. And I think the big thing is, my partner has just insane deal flow from having two of the biggest of it, take the top 10 of the last decade and he and his friends did two of the last 10. He just gets insane deal flow. right?
Yeah, being able to say no a lot, at least in ventures, is extremely valuable. And to be able to say no a lot, you need to have a lot of flow. So, and
Yeah.
that's pretty rare too. So I
Yeah.
agree.
Um,
Yeah.
well, uh, let's start with what's the website if people want to come check out the company?
Figment.io, Figment like your imagination, which we thought was kind of ironic considering when we started, people didn't know blockchains were just in your imagination. Unfortunately, there's also a Disney Purple Dragon secondary character also named Figment, which didn't check when we registered that domain. And unfortunately, there's maybe a movie coming out. But and until then, if you type in Figment and blockchain, you won't get a purple dragon. You will get our website. So.
Okay, and then if people want to follow you, is LinkedIn the best place, or where's the best place?
No, I should be better at LinkedIn, but basically Twitter, at Lorien Tree,
Okay.
Tree being my middle name. So, you can find us there or at figment.io on Twitter too,
Okay.
on X to be correct.
Yeah. Um, when you think about one of the best pieces of business advice you ever received, what do you think one of those would be?
Um, this is I debate this one internally a lot, but I think it's right. I think consistency is underrated. So, especially in startup life, and I have a joke here. I had a mentor who was very into stoicism at one point, and sort of we talked a lot about applying that to various aspects of life, and in particular business. And especially, I think part of my role is chief stoic. Sounds like a better title than much more fun than um, CEO, but is to basically when things are amazing and everyone's printing money and prices are through the roof, is to basically like tell people to turn off the ticker fee, turn off the price, whatever price source you have, continue to do your job. Don't get too excited. It's like just relax. This isn't going to be around forever. And then conversely, when things are very dark and stormy, which they have been up until the last 3 or 4 months in our industry, and prices are low, and people are going out of business, and there's fraudulent actors, and everything's kind of falling. It appears as falling apart. Is to be like, just we have the right product. Just keep building, keep your head down. It's going to be okay. Don't panic. And so I think that there's like in a startup having like a grounding or a fairly consistent voice that doesn't like cream around and change direction and freak out, hair on fire, or like, yeah, let's party, blah, blah, blah. Everything's awesome. Like, I think it's just useful for employees and investors to have some consistency regardless of like what the macro conditions, which you don't control, are. And so I think I think it's very useful in a startup environment to have, whether it's a CEO or someone who plays that role, to basically like keep doing your job and building what you're building. And it's going to turn out if you do that.
Okay, we should have started with this. I am such a stoicism fan.
Okay.
Do you like Ryan Holiday?
Yeah, absolutely. I do. I do.
I'm a big. I just have the Oscars the way on repeat. It's like what I do instead of taking Prozac. I just like every time I get stressed out as CEO, I just start listening to that, and I'm like, oh yeah, look at all these people with things worse than me that they solve.
Yeah, right. Exactly.
So, my favorite Stoics, Epictetus. What about you?
The one that I've read the most of is Marcus Aurelius and Meditations, which I've probably read like two or three times, or I've picked up at least that many times and read large parts of it. And oh my God, the book that actually got it into me, and I've forgotten now. Maybe we can post in the show notes afterwards. The one that I read the first 15 years ago or something, like it was a great introduction to it. It'll come to me. We can post in the show notes. But yeah, so I think it's a useful, I don't know, they'll object to it being a religion, but a philosophy of religion for running your life in the modern world, I think is really good, and has a bad rap in some ways as cold and unfeeling or unparticipatory, and above all that. But that's not it at all. All the great Stoics also, had empires. So
yeah,
you can do both.
I think it's a great philosophy. Like, I'm a churchy guy. I think that the whole, Christ, like, treat people the way US people treating you is like pretty good, right?
Yeah.
But underneath that, for me,
I have one of my favorite lines, or one of my favorite, like, that I don't know, I probably stole it from someone. Maybe I came up with it. No, I definitely didn't come up with it. But it is like, I'm not religious, but I take religion very seriously. And And then that's
Well,
kind of my perspective on that. So,
and I am pretty religious, but I take
yeah,
stoicism seriously. And
there you go.
um,
Exactly.
I just, I love how powerful it is to realize I don't have to change my circumstances to stop feeling trapped. It's almost always possible by changing my perspective.
Right.
And I just feel like those things are like a crowbar for getting me out of.
You just gotta gaslight yourself. That's all. Just gaslight yourself a couple times every day. Say the exact opposite of what you're feeling, and you'll be okay. So,
Yeah, but it is like absurdly calming and cheap. It's free. Take some
it
time.
is free.
It,
It
it
is free.
it's not
Yeah,
free
that's
in
true.
the sense of it does take it. You do have to pay a price to get yourself to a place of radical self-honesty instead of indulging negative emotions or, like you said, overly optimistic emotions. And
Yeah,
um, there is this cost of not being allowed to wallow in self-pity, like sometimes feels delicious in the moment, even though we know
it
it's not
does.
great, you know?
Or Schadenfreude, or any of those wonderful German long words. Yeah, that
Yeah,
feel good.
yeah.
Yeah,
Um,
yeah. I
well,
agree.
thanks for sharing that.
Yeah.
Um,
No, likewise.
listen, this has been super fun.
Uh,
Thanks for doing this.
I appreciate your time a lot. So I know it's valuable, and thank you. And this was fun.
Yeah, you bet. Okay, bye everyone.